Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's quickly look at what markets are doing. And it has been a choppy market of sorts, but we've recovered from the day's lows. That's a big positive. We've in fact touched 25,900 now. We're very close to the day's highs, and that's the positive part. 25,961 is obviously where we started, but thereafter we've seen a gash with regard to the way the market opened. And we slipped very, very quickly below the 25,800 mark as well. But we've turned around since that point, built on the gains that we did have in midday. Let's look at some of the key losers with regard to the Nifty 50 index. Asian Paints down 4% in trade today. Tech Mahindra is the other culprit, and the entire IT pack along with it. And then there's M&M and Interglobe, both of them languishing 1% plus lower. The gainers, well, in terms of the ratio of losers gainers on the Nifty, it's gotten much better. In the morning, it was just maybe 3 or 4 stocks in the green versus 46 stocks in the red. It's changed dramatically. 21 advances to 29 declines now, with Titan, Eternal, some of the consumption names leading. But thereafter, you've got Adani, Twins, Shriram Finance, BEL. All of them have picked up some bit of steam in trade today. Now let's talk a little bit about what's happening in the broader market end of things as well. The Nifty mid cap is up around 1/3%, so showing remarkable resilience. But the Nifty small cap is where all of the gains are sitting. 0.8% higher on the Nifty small cap, doing very well for itself. So it's actually a mid cap, small cap led market, and the advance decline is skewed towards the advances within that mid cap and small cap basket. You have a Tata Tele and Eris Life, a Restaurant Brands, all of them doing extremely well for themselves. Restaurant Brands is up over 6%, so doing very, very well for itself. A Triveni Engineering, a Sharda Cropchem, and Ather, Rallis, all of them are up over 5% each. Some of the losers, again, in trade, there's an Eclerc sitting 4% lower. A GR Infra is down 3% despite an order win. Sobha is down 2.5+%. Rosari Bio also down by a similar percentage. And BSE also seeing a bit of pressure, 2.5% lower on BSE as well. In terms of sectors, IT and banks is flat. IT is down over 1%, so you're seeing pressure there. But outside of that, you're seeing a bit of green, 0.7% high on the Nifty India Defence Index. Metals are absolutely flat, but slight positive bias. PSU banks are up 1.4%. So you're starting to see a bit of a turnaround in some pockets, in some sectors. Realty also up 1% in trade. So that one also is doing fairly well for itself. And that's how the tilt is currently. Auto is down around 0.5% thereabouts. PSU banks, realty, defense are the top gainers along with FMCG, and maybe a hint with regard to where banks are concerned. So that's the way in which it's shaping up, at least at this hour. Kunal, how are you viewing markets?
Well, this is a good recovery for the indices, and not just I think for the index, but I think more importantly for the market breadth. As you were flagging off, at the start, I was looking at the market summary, and it was almost like a 350 stock advancing towards 2,350 stocks on the NSE, which were in the declining mode. So from that 1:7 kind of a advance decline ratio, we are now in the favor of advances. We have almost like 1,900 to 2,000 stocks in the advances compared to 1,050 on the decline. So for that dramatic change to happen on an intraday basis, I think is the hallmark of the day today. What we've done also in the process of this recovery, and there was this very interesting gap which was seen on the futures on the Nifty spot levels on the daily chart, where I think the start of the month of November, there was this gap around 25,720 levels as a base and 25,800 as a higher end of this gap. That gap has been partially filled. We've seen historically also that gaps, they tend to act as strong support levels for markets. Today's candlestick pattern for the Nifty is more like a classic bullish hammer formation. A very interesting candlestick pattern, because historically this has had positive effect on the Nifty in the near term. So to sum it up, I think it looks like that the reaction today should have more positive effect for the markets in the next couple of days as well.
Okay, so positive effects. And is this even more relevant, Kunal, given that today is expiry day?
Not really, Harsh, because
Okay.
it's a weekly expiry,
Yeah.
so it doesn't generally have impact on sectors as well as stocks. But yeah, I think it does have impact on the index trends per se, and specifically, I think the strong psychological marks like 26,000 odd generally becomes a good hub for option writers. So today would probably be a day where maybe in the last half an hour, last 1 hour, you might see some bit of selling coming back into the indices because index traders would probably try and protect the 26,000 mark, especially in terms of call writing perspective. But I think that's what the charm of the market is, that maybe today you might see the index go into some bit of selling pressure in the second half, but then potentially tomorrow when you start off with a fresh weekly expiry, then the chances of the Nifty scaling back to the 26,000 mark is pretty much on the higher side.
Okay, and plenty of movers in trade today. Ishika's here with that entire list. Good afternoon, Ishika.
Right. Yeah, so Harsh, some of the stocks in news right now are in focus are, well, first up is Ajmera Realty. Now they've launched a premium and a mid-segment residential property called Ajmera Solis, and it has recorded a sales of around 427 crores within the first 24 hours. Next up, we have Wellspin. Now it is planning to expand its footprint with a 46-acre Telegaon MIDC project in Pune, further unveiling its 550 crore plan for a next-generation logistics park. Next up, we also have Apollo Microsystems. Now it has announced a major greenfield expansion project in Telangana with its subsidiaries worth rupees 1,500 crores. We also have SpiceJet in focus today. Now they have added Boeing 737s, two of those in their fleet. We can say that they're spreading their wings even further. And we also have JSW Steel on the list. They've reported a 5% year-on-year rise in consolidated crude steel production in November, touching nearly 24.4 lakh tons. Last but not the least, we have Fujiyama Power Systems. They've delivered a strong quarter 2 results. Revenue is up 73% on a year-on-year basis, and PAT has almost doubled. Back to you.
Thank you so much for that. Yes, Ajmera Realty is up around 3.5% in trade, and some of those real estate stocks are doing well. We'll talk about that in just a moment. But Samir is here with us, and it's a big developing story, of course, that he's covering. Interglobe Aviation. They continue to feel the heat on D Street as well, and they might land up facing strong regulatory action as well. Samir Dikshit with the latest on whatever he's picking up with regard to Interglobe Aviation. Samir.
So DGCA has taken a big action against Indigo. A clear order is to reduce the flight operation by 5%. This simply means that Indigo, which operates roughly around 2,200 flights daily, they have to reduce the flight by 5%, especially on high demand routes. For example, Delhi, Mumbai, Delhi, Chennai, Kolkata, Hyderabad. On these particular routes, they have to reduce the flight by 5%. And this is because DGCA has observed that Indigo is unable to fulfill the commitment. Unable to serve the flights, the routes, as well as the winter schedule. So not just 5%. If you see, DGCA has also issued the show cause notice to Indigo management, for which Indigo management has responded. But this particular response lacks the big answer. The big question is that what Indigo did for the last 1.5 to 2 years to commit to the FDTL norms, and most precisely about the hiring of the cabin crew and the pilots, which is yet not answered. So this might indicate to the point that in coming days we might see this flight reduction numbers may go up from 5%, and even the financial penalty or some sort of action on the officials might be taken up. In addition to this, DGCA has also mentioned in their order that in the month of November there has been significant flight cancellation, roughly around of 950 numbers, whereas for the month of December we have seen in the last 7 days the flight cancellation, it even crossed 1,000 mark. So Indigo, though it is stabilizing, but the numbers show that Indigo is unable to operate to their maximum capacity because of the unavailability of the manpower, or specifically the cabin crew and the pilots, for which this action has been taken. As of inquiry committee has also been set up, and inquiry committee is likely to summon Indigo officials on 10th of December, questioning that what is the real reason behind the inconvenience caused to the passenger, behind the massive flight disruption. And this inquiry committee is likely to submit its detailed report mentioning about the real cause and the recommendations within next 15 days.
Thank you so much for that, Samir. That's, of course, the latest with regard to Indigo, and the crisis continues, of course. We also had the aviation minister, Mr. Ram Mohan Naidu. He spoke about the same at the Rajya Sabha, and he's blamed the airline for massive cancellations and failures. Listening to what he had to say.
Measures remain under continuous supervision by the ministry. At the same time, accountability will be ensured. DGCA has issued show-cause notices to Indigo's senior leadership and commenced a detailed enforcement investigation. Depending on the outcome, strict and appropriate action, as empowered under the Aircraft Rules and Act, will be taken. No airline, however large, will be permitted to cause such hardship to passengers through planning failures, non-compliance, or non-adherence to statutory provisions. The government is determined to build a more robust and competitive aviation ecosystem. Through our policies, we are encouraging more new airlines to start and operate in India, ensuring fair access to airport capacity and eliminating any possibility of duopoly, controlling connectivity and pricing in our skies. More airlines mean more choice, more affordability, more resilience for the passengers.
Now that didn't sound very pretty where Indigo is concerned, and you can see how the stock has slipped, continues to slip in trade, and this is on the back. If you pull up the 5-day chart of Indigo, this is on the back of what we've already seen in terms of a 17% cut on the stock price over the last week or so of trade. So you've already seen that 17% odd, and then on top of that you're seeing maybe another percent and a half. So there's clearly visible pressure with regard to where the stock price is concerned. This is of course the last 7 days stock chart where the stock is down nearly 18%. Now this is a nifty 50 counter, mind you viewers, so down 18% is large. 36 to 40,000 crore of market cap completely wiped out, and amid the big Indigo fiasco as well, the Prime Minister PM Modi told MPs that passengers should not be troubled due to the operational chaos. Listening to the Union Minister Kiren Rijiju, who narrates what the PM has directed. Listen in.
प्रधानमंत्री जी ने सारे एनडीए सांसदों को देश के लिए और अपने संसदीय क्षेत्र के लिए और राज्य के लिए क्या क्या करना है बहुत अच्छा गाइडलाइंस मार्गदर्शन दिया है। विशेष करके मैं एक विषय का उल्लेख करना चाहता हूं। प्रधानमंत्री जी ने लोगों को ज़िंदगी को सुधारने के लिए रिफॉर्म्स पे बहुत जोर दिया है। भारत में जितने भी नागरिक हैं सबको भारतवासी होने के नाते कोई सरकार से तकलीफ नहीं झेलना पड़े, इसका सुनिश्चित सबको करना है।
Okay, that's with regard to Indigo. Now, before I take a chart check and also probably a fundamental view of all the comments that have come with regard to an Indigo, let's slip into a very short break. On the other side, we'll talk more about this and try and assess what the impact could be. Stay with us. Welcome back, and we will have a fundamental conversation very shortly. But before that, Kunal, your picks for this afternoon. You've got maybe an hour and 10 minutes of trade left. What are your trades for the next hour?
So I'll suggest a buy on delivery. That's a chart which is looking attractive. In fact, we've been discussing this, that stocks which are ending the corrective phases, they tend to become very attractive at lower levels. Delivery seems to have completed that kind of a corrective wave. It's bouncing off slight above its 200 moving average. So risk reward extremely attractive. Would look out for a buy with target of 430, stop loss at 410. And in the similar vein, PSU banking stocks now I believe have come back towards a very attractive point. So would look out for Bank of Baroda. Would suggest a buy with a near-term target of 295. Stop loss could be kept at 285.
Kunal, if I can toss in a question on Asian Paints, what's happening there? 4.5% Nifty 50 counter, which has shown remarkable strength over the last maybe month and a half. What's happening here?
See, I think to sum it up, the selling is rotational for stocks. So, for example, today you also have names like ICICI Bank, which was one of the stronger ones, is into a negative price terrain. So this is a phase of the markets where even the strongest of the stocks at some point of time would go into that selling spree or into that selling juncture it could also be one of the reasons why I would believe that mark-to-market selling generally happens, because when you have your portfolio which is maybe bleeding as such, then you want to offset with gains which you've established in many of the other stocks. And Asian Paints was a classical stock in that sense. But this should not ideally deter longer-term investors or medium-term investors into buying the stock back again. These are part and parcels of every trend which happens into stock prices. They go into a phase of an extensive price rally, then a sudden price correction for the stocks, which maybe last for a magnitude of 5% to 10% broadly from their swing highs, but then they become attractive yet again. So I believe Asian Paints, say potentially over the next couple of days, I think should come back towards an attractive price point where traders could look at a contra buy.
Okay, all right. Let's go across. We have Srivatsa, beg your pardon, Executive Vice President and Fund Manager Equity at UTI AMC, joining us. Welcome, Mr. Srivatsa. Talk to us first off about what you make of Indigo, and I'm not taking a stock view from you. You've obviously seen enough cycles to understand as to what happens to companies with 60-70% market share, and what the risks could well be of owning a company like that in your portfolio. In your sense, is this kind of market share for an Indigo maintainable given the current environment, given the kind of pushback that the government is giving, or do you believe that the government is going to double down on something like an Indigo and maybe you could see market share dilution here? Just give us that sense if you could.
Yeah, I can't specifically talk on a company, but broadly on the sector, what has happened is that because of the fact that in the last 10 years, so many airlines have collapsed and there is only one efficient player. So it has led to this situation of, a single player having 65% market share, and obviously any issues at their end, throws the entire system into disarray. Now, obviously, the government would want to cut it down, would want to bring down the share of the largest player in the industry to a more reasonable level of, say, 50-55%. But the equal challenging part is that the other three players are also not in great financial shape, in spite of very good operating environment in the last 1 year, in terms of, limited competition, buying crude. In spite of these factors, they are sitting on huge losses, and probably two of the players may not have even the capital to fund those losses, whereas the second player does have some amount of capital. So there would be a temporary setback in terms of some kind of a reset for the industry. But I don't see the industry dynamics changing very rapidly from, say, a player having 60% market share to going to 40, what it was 10-15 years back. I think that is still quite some time far away. And in spite of the fact that last 3 years we have just seen four players or virtually a two-player market, nobody has come and entered into the industry, which shows that given the kind of bloodbath which has happened over 2 decades, probably, nobody wants to, enter this industry. So there would be a temporary reset, temporary disruptions, but I will not call for a very structural change in the industry over the next, in the medium to long term.
I understand. Okay. Thank you, Mr. Srivatsa, for that view. I know it's a difficult question to answer without getting stock specific here, but thank you for that. It gives you a good insight or lens into how you're thinking. Talk to us about how you're viewing markets and how you're looking at the earnings cycle play out, right? We're likely to see earnings pick up starting H2. What's your view, and can we expect maybe the next year, FY27, as well as FY28, to be solid years of earnings growth? Is that something one can comfortably pencil in your opinion?
Yeah, I think if one looks at the earnings, definitely in the last 1 year, we have seen a fair amount of downgrades. Now, what has happened in the last, I would say, 9 to 10 months is very strong government action in both GST reforms as well as income tax reforms and effort in improving the liquidity on the system. All three factors have, led to I would say, a revival on the consumption side. So we are definitely seeing the impact of that, be it autos or durables. There has been a sharp pickup. And more importantly, banking, which is the largest sector in terms of weight as well as probably by profits, is also seeing a sharp kind of a turnaround, in terms of improvement in NIMs, benign credit cost. So if I look at the next second half, definitely things looks better. If one extrapolates into next year, of course, there's a lot of variables which is still outside our control. Like for example, crude. For some reason, crude goes back to 1995. It could really throw the entire equation out of gear. But as of now, the thing stands today, I would see a reasonable case of maybe a low double digit kind of a earnings growth for next year, which bodes very well for the market. See, what I believe is in the long term, I think the performance in the market clearly depends on the earnings growth you can deliver. I mean, if one looks at say 20 to 24, very sharp earnings growth of 19-20%, equally sharp performance. So I think broadly the stars are aligned, but yes, the biggest risk that I see today is the trade. I mean the US trade deal. If nothing comes in the next 3-4 months, there would definitely be a pressure on the market for sure. I think that is a risk that we need to watch out for. Bearing that, I think we should be comfortable in terms of earnings growth, and hopefully the market should follow that earnings growth.
What are the pockets, Shivatsa, that are looking attractive, either from a re-rating perspective or from a large pool of profit which may be which might become available to them in the next 5 years? Are any of those looking good from a risk-reward standpoint? Either, so you can catch multi-baggers either one of these ways, right? Give me a third if you have a third, or give me a sense of the sectors that fall into these two buckets.
See, I largely look at where valuations are because
Sure.
I'm a very value-focused fund manager. So clearly, I think to me, IT looks to be the best place. I think the market has penalized it for a very low kind of a growth visibility for this year. Plus, obviously, the impact of AI, which is still, not very clear whether AI will benefit or harm them. But as we see, I think clearly the demand visibility is improving every quarter, and we see no reason why it cannot improve next year. As I said, I think the verdict is still unclear whether AI will impact or benefit, but our view is that near term it may benefit for sure. And lastly, you also now have a very positive currency outlook in terms of, so there is a case of probably an earnings, at least the earnings being maintained for next year, which itself is a very good outcome because valuation, at least if I look at the IT large cap, is pretty reasonable at around 20 times below the market and 4 to 5% free cash flow yields, which is the best you can get in their history. So I think over a period of time, over the last 10 years, if you see wherever the sector is traded in these valuations, maybe the outlook is bad, but they have always bounced back and outperformed. So that's one of my top sector picks. The second is, I think, oil and gas. Clearly, I see a case of a lower oil prices, which bodes very well for the sector, because a large profit pool comes from the OMC side. And secondly, I think also in the gas, after many years, we are likely to see a lower LNG prices, which should accelerate the demand pickup on the gas side, which should also bode well for the gas related stocks. So I think these are the two sectors that I would call out for from a broader perspective. Then you would also have an healthcare, which again has suffered on account of US issues and maybe not a great domestic growth, but I see that also turning around. So these three are the large sector weights that I would pick. I mean, it's an overweight in across my funds.
Okay, Shivatsa, hang on there. Hang on to that thought. What we're going to do is slip into a very short break. We'll come back, continue this chat. It's very interesting, and we'll continue with regard to what you're liking within consumption. So, viewers, stay with us.
Back with closing trades, right here it's ET now, still struggling for Asian Paints. That's down 4.5% as we speak right now. Interglobe Aviation, of course, the most volatile chart today. That as well is still lower by about nearly 2% or so. IT under pressure today. TCS, you've got an HCL Technologies, Wipro, Techem, all down. And that's the case with the Reliance as well. Along with a couple of private banks, they as well are lowered. Having said that, on the flip side, Titan, Eternal, Shriram Finance, Adani Enterprises, BEL, Axis Bank, they are the ones which are actually pulling up a large part of the weight. And look at the recovery in Keynes for that matter, 12% higher as we speak. PG Electroplast, RVNL, Delivery, and the beaten down realty pocket from yesterday, that also seems to be making a comeback. Look at a Godrej Properties, for instance. It's almost notching a 4% gain as we speak right now. But we're still in conversation with V. Srivatsa. Srivatsa, I wanted to figure out whether the pain in Keynes is quite done. I'm not sure if you're tracking the individual story or not, but the fact that the stock has finally bounced 12%.
Yeah, again, I can't give individual comments on stocks, but broadly, if I can talk on the sector, I think the whole EMS sector, I mean, they've got good visibility for growth, but I think the big challenge is whether they'll be able to generate enough operating cash flows. I think that's been an issue in some of the companies. And more important, I think if one looks at the growth areas, they are into very different areas where their credibility is not proven. So, and obviously the valuations are extremely on the higher side, giving them the full benefit of doubt on the execution. That's something that's not part of my portfolio, but it would be a wait and watch before I could, take a view on the stocks in this particular sector. But I can't give a specific comment on a company.
But great to have you on the show today. Thank you so much for your time.
Thank you.
Right. Okay, let's take a very quick break on that note. When we come back, of course, the big interview that everyone has been waiting out for, the Civil Aviation Minister talking about the Indian skies and, of course, the state of Interglobe Aviation. That on the other side of this break. Back with closing trades right here on ET Now, and it's time for that mega exclusive. The aviation minister speaks with Times Network's Navik Kumar on the crisis that has shaken the aviation industry over the past week, assures that the government will ensure Indigo pays for its negligence and mismanagement, also adding that they will start an inquiry into the DGCA. Here's an excerpt of that exclusive chat.
In November, if you look at the facts properly, there have been certain days where the cancellations were absolutely zero. We have been thoroughly observing the situation, not only for Indigo, we have been observing it for all the airlines. All the airlines, due consultation was done before the implementation, and also the idea was let the airlines also be prepared to do this. So the consultation was going on. In the meantime, when the High Court orders were also passed, we respected the High Court orders. We gave the timelines. That was all in consultation with the airlines. This is the first thing that we have to understand, that in implementation of the FTTL, the airlines was also partner. Don't take away the responsibility of the airlines here. They have to be responsible, accountable in this issue. And if there was a difficulty, then it has to be faced by all the airlines. And within Indigo, you are seeing why I'm trying to mention this point is we have to understand why exactly this has happened. November, you're mentioning certain cancellations. November, there was...
Sir, 1,200 plus cancellations.
There were certain other issues of the weather issues, and there were also the volcano issue that was happening, which was their visions were supposed to happen. So there are multiple other issues also which have come in.
755 cancellations only on FDTL in November.
Yes, and then we have discussed with them. We had a meeting on 1st December 2025. 1st December 2025 on FDTL with Indigo. On FDTL with Indigo. We have given all the chance for Indigo to speak with us on FDTL. They have asked for clarifications. Whatever clarifications we were supposed to give after due consultation, we have given them. Even after that, it was Indigo which has messed up its own internal crew management and crew rostering. This is exactly the point that I want to make.
So if Indigo has messed up its internal systems, why are you accommodating them? Every time there is a press release and it says that Indigo has profusely apologized. They don't even know what their internal issues are. They have said so in a press release. They have not appeared before you. Every time the ministry has accommodated them. every time the ministry has relaxed the norms for them. You have given them time till February. You have cancelled and taken back your FDTL norms till such time that Indigo is comfortable. I want to ask you, are we running airlines here for the comfort of the people of India or for the comfort of the profiteering of an airline called Indigo Airlines?
Navika ji, let me make it very, very clear once again that the ministry, the government is there for the people and not any company and not any airline or not any other people who are behind this. Let me just rephrase it this way. I am the Minister of Civil Aviation of the country. There is an incident that has happened. It is the responsibility of me to ensure the normalcy is also there. There are still hundreds and thousands and lakhs of people who still want to travel, reach their destinations. I'll take the point which I've already mentioned. Air travel is an emergency travel most of the times. They want to reach within the stipulated point of time. And they want to reach the destination for many important things. So is it not my responsibility to normalize the stabilize the activity that has been happening? So which is why for a temporary period, we have done so, finding the issue, the root cause that this might be the issue, to restabilize, reboot the operations. It was done as a temporary measure, reducing the operations. We are having curtailed operations right now. We are not running that full capacity what they have had.
They are not in a position to run it.
They are not in a position to run it, and we are not running it at the full capacity to restabilize, because here we all have to keep in mind that the safety is of the first priority.
We can't mess up. You have rolled back FDTL.
Safety
has been compromised.
This is to reboot the roster. This is not to compromise on the safety. Safety risk assessment has been done, considering the roster that they have, considering the operations with which they are doing. Your fact comes to the point if I'm doing it at that grand scale of operations which they have envisioned. But we are doing curtailed operations here. The roster needed to be rebooted, and which is why to immediately get back onto the track for aviation, for all the necessary people who still wanted to travel in this time, it was a necessary thing. And we have put very strict guidelines on that it is for a temporary period. And it is also going to be verified how they are going to get back on track. On a weekly basis, we are going to review this issue.
Mr. Ram Mohan Raidu, my question to you is, we are 2 years behind schedule on implementing safety for passengers. So that you are doing a lot for safety of passengers is a concern that you should put aside. This really does not wash down with the people of India. Seems to be that lives are extremely cheap in this country, which is why airlines are accommodated, people are not. There are refunds, there are provisions, and it is absolutely evident with the sequence of events that Indigo had no plan. They had no plan to implement the roster duty changes, the FDTL requirements. They had no plans, and evidence suggests that to a lay person. Yet what Indigo gets in return is accommodation, relaxation of deadlines for implementation, and a profusely apologetic statement that they put out. Not one head has rolled, not one action has been taken. And may I tell you the human side of this? There was a lady traveling from Shillong to Kolkata, accompanying the casket of her dead husband. If you saw that, Mr. Naidu, you would sit here and cry just as that woman, hapless woman, who was waiting, and the airlines had no answers to give them. In the middle of this, if you give me an assurance that you are worried about the safety, I'm sorry, nobody in this country will believe you.
First of all, I totally sympathize with all the people of the country who have faced this distress. There is no second thought about it. Not only as a minister, as a person of this country, when people go through this hardship, it is the empathy that comes out. And I totally have it for the people. And it is with that empathy also that I'm working here, keeping a passenger-centric approach. And this has been my approach all throughout. I considered people to be the most topmost priority. And there are ways of doing things when it comes to safety, when it comes to regulations. Because there are, like you said, courts are involved. There are different organizations involved, stakeholders involved. When you have the complete consultation process of the stakeholders, what needs to be done in a month, what needs to be done in 2 months, considering the factual situation, considering the opinions and feedback from all, it might take some time. but you are arriving there, you are trying to do it. And on the other point, of the safety aspect, we have never compromised on anything. Once we have implemented, we have not gone back on anything. And here also, I'm trying to specifically mention this point, the very passengers who are hurt, who are agitating, who are facing this crisis, it was important for them to reach their destinations. It was important for us to restructure the operations so that they do immediately. And in the entire process, let me make one point very, very clear, that we are not leaving Indigo at all.
What's the action you're going to take?
Very accountable.
I haven't seen, people haven't seen any action so far. What are you going to do?
We from the ministry have advised the regulator to cut down 10% of the operations.
That's not punishment enough.
10% of the operations in the prime route. There are multiple things. This will act as a deterrent for them, also to encourage the competition and also to ensure the stability on operations. Second thing, we have also issued a show cause notice. We are thoroughly going into detail of the reply that has been given. Show cause notice to CEO of Indigo, CEO of Indigo. This has never been done. It has been done for the first time considering the incident. Third, we have also had a detailed inquiry which has been started. We have given them a stipulated time to work it out because we wanted to know exactly where all they have done the mistake and not only how we have approached to this situation. Why was it that those 2 days, 3rd, 4th, where it peaked, why was it that 3rd and 4th, they were not even able to manage this situation? Why were the passengers, even if cancellations?
As we speak, 76 flights, arrivals and departures have been cancelled in Delhi alone today. And we are sitting on the 9th of December. You think it was a 2-day period where there were discomfort? No,
Navika
sir.
ji,
It's been going on for 8 days.
Let me clarify certain things. 3rd, 4th is the time when the people didn't have any communication about the cancellations. We have cancellations today because Indigo is not able to run in its full operations. But whatever is being cancelled in due with proper time, they have been communicated. Your flight is being cancelled. You can refund. You can get a refund or rebook. So all this activity is going on. But why specifically I am mentioning 3rd and 4th? An airline which has been properly functioning for 20 odd years and suddenly it comes to the point that it's not able to communicate to its passengers. It's not able to tell them. It's not able to tell them that.
The charge against the airline is that this was deliberate. They had not prepared for the FTT and they always knew they could arm twist the regulator and the government, and they have managed to do precisely that.
And I want to get to the bottom of this. Let me tell through you to Indigo or whoever it is. It is not just one airline. Any airline who thinks ministry is just sitting like this and just doing this, it is a strict warning to them. This is going to be an example for all of them and the future to come also, that nobody can take us non-seriously. We are going to take very, very strict action on this, and I'm very, very damn serious about this. This is how the government is going to function.
What's the timeline?
Very soon. Let us get to the report.
Will you sack the CEO? Will you sack the CEO?
If it comes to that, definitely I will do it. I will charge them with all the penalties that is there.
Criminal action?
Definitely I will look into all of those aspects. It is not only about these things that have happened. I still sympathize. Like I'm telling you, I'm hurt, deeply hurt with all of this. For the last 7 days, I have not slept properly. I have just been sitting in the office doing continuous review meetings. My focus was on the passengers. I wanted them to travel to their destinations without any delay. I wanted all the distress they have faced to be done immediately. So whatever I do, one, I want it to be an example that anyone messes with aviation in the future. Anyone who thinks that ministry is just doing things just the way it is going to do, I am going to set an example for that. Second thing, the people who are in distress, I want to do something for them. So we at the ministry are thoroughly looking up at the incident. We are going to see how can we do something so that the people who went through this distress also kind of get some kind of relief or benefit.
Okay, we have more than one top story on the day today, and we have Ankur joining us from Terminal 2 of the Mumbai International Airport. Ankur, what are you picking up on ground where Indigo is concerned? Give us a sense.
Yes, we are at T2 terminal of Mumbai to check a status of how much of the impact is there due to cancellation of a few of the flights by Indigo, and also what are passengers saying currently. What we can see behind me, the operations are going on smoothly compared to what it had been in last few days. But more importantly, it's not that the normalcy has been restored. There are still cancellations. We know 9 today. And overall, if you talk about the impact, just in terms of statistics, we have been given around 40,000 passengers have been impacted due to cancellations. If you talk about the passengers who got impacted due to delays, it will come to 260,000 and counting. However, government is trying to restore the normalcy. When we try to ask how soon the normalcy will be restored to the Joint Secretary in a briefing which was held earlier today, we were told not a definitive timeline, but definitely government is working on it. If you talk about statistics, yes, that is improving. 70% normalcy restored. Till now, 90% of the baggages have been returned to the customers. But more importantly, an intimation has been given to Indigo to inform 6 hours in advance if there are cancellations.
Okay, at least by the visuals, Ankur. Thanks for that. Seems like normalcy is somewhat, getting back at the airports. But let me welcome on board Shivangi Sarda, and we've got Sudeep Bandyopadhyay as well to chat about whether normalcy is going to come back to the markets anytime soon or not. Shivangi, hi, afternoon. The chop and churn clearly continues, and especially after yesterday's rough patch, it's nowhere better today. What's your reading on when or whether or not we could see a meaningful comeback by the Nifty per se? And I'm not even talking about the broader markets here. And if you think that the weakness is going to persist for some more days.
Very good afternoon, Aisha. Thank you for having me. So we've seen that, of course, the indices have faced the bloodbath from the last few trading sessions. And even after attempts of recovery above 26,000 levels, it hasn't been able to sustain those zones. And it has call writers have taken over the entire broader market. Overall, we are seeing good bounce back move from 25,750 levels where buying was seen. But then overall, we are expecting the index to remain a little bit lackluster, and 25,750 would be an important make or break zone here. If it manages to hold these levels, we could expect some bit of consolidation, and 26,000 will continue to be, the resistance for the immediate basis. But we are expecting some sort of, weakness to persist, as per the broader market or as far as the stocks specific action is concerned. So the recommendation would to be with strategy and to be with the heavyweight counters.
Okay. So what are your picks there for Shivangi?
So from today's market, of course, we have been seeing that Bharti Airtel is one of the strongest counters, and even despite the market volatility, this stock has been one which has kind of resiliently held on the weekly basis, and it is consistently trading in an upward sloping channel on the monthly frame as well. So this one's quite positive and looking, positive for the next upside move towards 2,200 odd levels. So buy here. And the stop loss would be 2,050 levels. And the second pick on my radar was Titan. We've seen that, of course, this stock has witnessed good amount of short covering today. And after the recent bend, we've seen that the stock has retraced from an important level. And even on the longer time frame, weekly basis, if we check, the stock has been moving quite well from the last 10 to 11 odd weeks. So quite positive, and we're expecting a good up move here, of course, with the seasonality as well. Stock kind of tends to do good in this quarter. So we're recommending a buy here with a target of 4,000 with a stop of 37.75 levels.
And of course, the big stock today and the big story today continues to remain Indigo. And Sudeep joining us as well, of course. Sudeep, your view with regard to an Interglobe Aviation down nearly 20% now, nearly 20%. Since the start of this month. Opportunity to buy, you reckon? Nifty 50 counter, 60% plus market share, very difficult to erode, right?
Well, Harsh, I think, the time hasn't yet come. There are still a lot of moving parts to it. Well, yes, it has corrected significantly over the last 7 days, and there is valid reason for that as well. There will be some regulatory action. There has to be. the situation is such that there has to be some regulatory action. They will be probably forced to cede some routes to competition. So it's a very, very volatile and fluid situation as far as Indigo is concerned. There is no doubt they command 65% market share, and it's not easy to wish away. And I think government is, deeply thinking and will have to think about it. Permitting monopolistic situation in any industry which caters to millions of people is an extremely dangerous thing, and we have somehow landed in that kind of situation. You take an example of telecom. I think government is trying everything possible to ensure that it doesn't become a duopoly, and they're trying to help Vodafone survive one way or the other. So I think the airline industry also needs to do something like that, so that one operator doesn't corner 65-70% market share. So my thought on what Indigo is, let's wait, let things settle down a bit, and only then look at buying. Undoubtedly, this kind of correction is a buying opportunity, but not yet.
Afternoon, firstly. Could it really turn out to be the Asian Paints moment for Interglobe? And I mean, it's not even an apple-to-apple comparison here. But for practical purposes, there's been only one listed aviation entity, and that's been Interglobe, right? We all know how widely that's held. But even a whiff of competition, could it do the same as to what happened to Asian Paints when there came Birla Opus?
It's not as you rightly said, it's not a like-to-like comparison, but there will be definitely a lot of steps which will ensure that their market share over a period of time comes down significantly. That much I'm sure. And the kind of commanding position they used to enjoy in Indian aviation for the last many years, I think they will not be in a position or allowed to enjoy that kind of market share. So things will be different for Indigo. While Asian Paints, is not that critical for the government or the authorities. It's a competitive space. There are other players. Whereas aviation touches millions and millions of people on a daily basis. So it's a very, very sensitive situation for the government as well, and they can't do anything drastic. But over a period of time, I think they will do everything possible to erode the market share of Indigo, which doesn't augur well from a valuation point of view and kind of a shareholder point of view. So as I'm saying, I'll be watching the space, but I definitely will not recommend a buy at this stage. I think we are yet to see many things happening here. I'm not talking about flight disruptions. I think that's a thing of the past. Things will stabilize from here on. But as far as action and the penal kind of imposition of penal steps by government and the authorities, I think it's just the.
Would you be willing to stick your neck out? I mean, did we see a panic bottom on Interglobe today?
Yeah, it seems like, Aisha. I think especially given the fact that in the last half an hour or so, this looks like more of a short covering, which is coming back into the stock price over the last 15-20 minutes or half an hour or so, when we've seen a recovery from 4,900 levels to now on the verge of testing the 5,000 mark, 4,980 thereabouts for the stock price. So I think in that context, it looks like that maybe that floor of 4,900 should act as a decent short-term support. It doesn't mean that the stock price may not fall further, but at least over the near term, this could probably be a level or a pivot zone where the stock price may just about try to fluctuate around.
3.5% higher intraday from the bottom of the day, Kunal. That's the kind of recovery we've seen on Interglobe in the last 15 minutes alone. So we've seen, or maybe 20 to 25 minutes alone. So we've seen a very, very sharp recovery from the bottom of the day. And the stock obviously now up 1% in trade already. So seen a very sharp recovery. You want to keep your eye out on that one. Well, let's move across. We have plenty of movers, in fact, and within the broader market basket. Let's try and talk about a few other names. You've got an Asian Paints, which is roughly 4% lower. You have an Eris Life, which is up 12.5%. Very strong volumes. Let me go to Shivangi. Shivangi, Asian Paints, what's the take?
So Harsh, we've seen that these counters kind of have faced a bit of a weakness in the last few weeks. But if we talk about today's movement, after the lackluster move, we've seen there is a breakdown and the stock has reached its 50 daily exponential moving average as well. Even on the monthly basis, we've given up most of the gains of the month and we've actually broken an important crucial level. So there would be some more weakness that we are expecting in Asian paints for that matter. And I would recommend a little wait and watch here to again, start accumulating. But of course, one could do a short-term trading on a sell side. And we are expecting around about 2,700 levels on Asian paint for the limited basis.
Okay, well, India's EV landscape also threw up a mixed picture for the month of November. In fact, two-wheelers have actually slipped 19% on a month-on-month basis, dragged by the steep drops that one has seen in a Bajaj, Ather, as well as in Ola. While three-wheelers managed to actually buck the trend, powered by Mahindra, Bajaj, and the surge in small fleet players. Sameer Dixit joins in with a quick roundup of the same.
The Indian EV industry, electric vehicle industry, witnessed a mixed trend in the month of November 2025 as per the data shared by FADA, the Federation of Auto Dealers. The commercial vehicle and the passenger vehicle segment, they registered a very impressive growth, but the electric two-wheeler, which is typically the driver of the overall industry, EV industry, it witnessed a slight dip. So when talking about the two-wheeler, electric two-wheeler, it witnessed a slight dip of 2.5% year-on-year basis, whereas the commercial vehicle segment, it registered an impressive growth of 202.7%. It is on year-on-year basis. Similarly, when it comes to the electric three-wheeler segment, the growth was quite electrified and it has achieved a dominant 62.5% of market share. When it comes to the EV car market share, it has also registered a significant growth and it now accounts for 3.8% of the overall passenger vehicle market. And it has been driven by a strong growth and the demand of 61.87% year-on-year basis. So the commercial vehicle and the passenger vehicle segment has shown good improvement. The growth is there, but the two-wheeler has shown a dip. When it comes to the particular company which has shown significant growth, so the TVS has led the electric two-wheeler space. They have sold more than 30,000 units for this month, and they have registered a growth of 11%. Similarly, Tata continues to dominate the passenger vehicle segment, and they have sold 6,153 units for this month of November. When it comes to Tesla, now Tesla has officially shared the number of the vehicles sold, and as per the data, 48 units in the PV segment. That's the Tesla selling number for the month of November. So overall, there has been significant growth in the EV space, but Tata Motors, which is typically one of the major driver of the passenger vehicle segment, it continues to dominate this particular space as well, and even in the electric commercial vehicle as well. They have sold 491 units, showing a slight improvement. So electric vehicle segment is growing. It is showing a growing trajectory. The electric two-wheelers in this particular space, it has shown a slight dip of roughly around 3% year-on-year basis.
Okay, now the other big mover, so first off, thank you so much, Sameer, for that. But the other big mover in trade is Kaynes Tech. They've clarified that there are no negotiations to change the statutory auditors. Reports based on which some of these claims have been made are incorrect. There's an interpretation of the management's remarks is incorrect. In fact, that's what they're saying. They periodically assess opportunities and for the moment there is no plan to change any of that. 14.5% or maybe even 15% higher on Kaynes Tech. Mind you, analyst community came out, spoke about how they found the Kaynes Tech con call. There have been very low to no target price cuts in terms of the way the analysts saw or read into the comments of the management. They are in fact of the view that the receivables will likely unwind going forward, which is going into H2 of FY26. And if that unwind were to happen, you could likely see some bit of the overhang go away. Kaynes Tech, Sudeep, would you at all venture? I mean, there are plenty of these big movers today. So let me first start off with Kaynes Tech, post the Indigo view that I took. Kaynes Tech, would that be an interesting play at this point?
Well, I think so, Harsh. Look, it's corrected very, very sharply. I think it's came down about 70% from its peak, 50% from its peak. It was quoting at around a multiple of around 70. Now it's quoting at a multiple of around 40. So yes, if I believe in this space, then I think it's a good buy at current levels. There were the accounting issues which were highlighted, and I'm sure the management will take necessary corrective action. They have committed to that. Yesterday's con call was, I think, pretty decent. And I think the impression we gathered is that things will be set right. Whatever were perceived challenges in terms of accounting will be set right. The business is rock solid, and I'm sure the valuation upside from current level is definitely there. But of course, we know these are not cheap stocks, and we have to keep that in mind when you're buying.
Right. Okay, that's the take coming in on Keynes, which of course is rebounding quite a fair bit today. But back to Interglobe Aviation and more updates coming in. The CEO, Peter Elbers, is now saying in a very fresh video that just came in minutes back that the airline is back on its feet and operations are stable. He adds that lakhs of customers have already received refunds. Let's hear out what he had to say.
Indigo is back on its feet and our operations are stable. We've let you down when a major operational disruption happened, and we're sorry for that. The beauty of air travel is that it brings together people, emotions, ambitions, and aspiration. And we know that you were traveling for various reasons. Thousands of you could not travel, and we are profusely apologetic about that. While we cannot undo the cancellations, I want to reassure that ever since, our entire Indigo team has been working very hard. First and foremost for you, our valued customers. Initially, our first priority was to get all stranded and delayed customers safely to their destinations or back home. Then we started our refunds. No questions asked. Lakhs of customers have already received their full refunds, and we continue to do so on a daily basis. Rest assured that we are fully committed in getting this done. Most of the bags stuck at airports have already been delivered back to your homes, and our teams are working very hard on delivering the remaining ones very soon. And we also continue to address all customer needs. In parallel to addressing your needs as a customer, the restoration of Indigo's network and flights was being done on a war footing. On December 5th, we could only fly 700 flights. Thereafter, gradually yet steadily improving to 1,500 on 6th, 1,650 on 7th, 1,800 yesterday, and today more than 1,800. As of yesterday, we are back of flying to all our 138 destinations in our network, and our on-time performance has also been normalized. Earlier, we had indicated to normalize between the 10th and the 15th of December. I can confirm now that today, as of December 9th, our operations are fully stabilized, which means flights reflecting on our website are scheduled to operate with an adjusted network.
Okay, so that is Peter Elbers, the CEO of Interglobe Aviation. That stock now up 1.5% and doing okay from the lows of the day, up 3.5%. Let's talk about another couple of stocks. One is an Ajmera Realty. We spoke about this stock at the start of this show, closing trades. Kunal, do you have a view with regard to the real estate pack? That pack is perked up 1% odd. Godrej Properties seeing some good traction. So is Ajmera Realty, of course, not part of the Nifty Realty, but up 3.5% nonetheless.
Yeah, I think many of these stocks are now coming back into a attractive risk-reward territory. So Godrej Properties, when it was sub the 2000 levels, DLF sub 690, 680 mark, where the stock had formed a near-term bottom. I think all of these are strong levels where it seems like the risk score is getting a little bit more attractive. The indicators are entering into the oversold territory on the hourly charts, which means we should see the stock trying to form a bottom over here for maybe consolidate for the next couple of days. But then eventually, I think these support levels should hold on to the stock prices. So this could probably be a good point where traders may start to look entering selectively into the real estate stocks. But the momentum for real estate stocks would come back once the sentiment starts to become a lot more positive, and that could probably happen once you see the Nifty climbing back to say 26,000, 26,100 levels. That could be a point where we may start to see some acceleration in terms of momentum. But as of now, price-wise, yes, they start to look very attractive at current levels.
Well, Eternal is the other stock that you may want to focus in on. While the struggle, of course, up that 300 level really continues. But there was a comment made by the Blinkit CEO saying that, he's warning India's QCOM bubble may actually be close to bursting. Now, was he hinting at, competition within that space? Or, is there anything more to actually read into this? Because, Eternal right now has no immediate fundraisers lined up for themselves. So it seems like it's hinting towards competition within the entire QCOM space. But Shivangi, map the charts of Eternal for us because it's been struggling off late.
Absolutely, Aisha. Eternal has been one stock which has been a portfolio stock, but off late it has been struggling. But, if you look at the monthly basis chart, the stock has given up most of the gains in the last 3 months. And, we've seen that the counter has kind of continuously traded in a downward sloping channel. So I would recommend a little wait and watch here because, of course, today the stock is up and in action by more than 2.5%. But overall, the stock has been in quite a lot of weakness, and we would expect, the stock to retrace back. But right now it will be a little wait and watch over here. We're not expecting further downside, but the upside still remains capped here.
Sudeep, what's your take on this entire QCOM race and who will win it? And would it continue to be Eternal? And then if that's the case, sub 300, do you think it becomes a good accumulate or add?
Oh, absolutely. In fact, I've been a fan of Eternal. In this kind of a space, it's a winner takes all. And that's what is being felt in the market. Swiggy has lost market share quite a bit. They are doing a lot of fundraise, and I'm sure they will want to spend money to gain back, claw back market share. But it's not easy. There is Zepto breathing down the neck. And the competition, as I think was mentioned, is definitely hotting up. But all said and done, Eternal has established a solid business. Their food delivery business is doing well. The quick commerce business is definitely the leader. They have gone into adjacencies by acquiring District from Paytm, which again has a potential to compete effectively with Book My Show going forward. So they have many levers on which they are operating. And the main two levers, which is food delivery and quick commerce, they are undisputedly market leaders, which give them a lot of leverage with the partners and the ecosystem. So I am positive on Eternal, and if I have to bet in this space, I will bet on Eternal. And yes, this dip below 300 is a good buying opportunity from a long-term perspective.
Okay. What about a delivery, Sudeep? Very quickly, do you like that one? Because they're going to help MSME or rather Indian MSMEs with their exports as well now. And stock is up 5% today. Not so sure whether it's on the back of that precisely, but is this also one of the businesses which is on the cusp of a bit of a turnaround of sorts?
Absolutely. In fact, I think I mentioned this in one of your programs as well. Amongst the platform companies, I think I do like delivery quite a bit. And I've been talking about it, unfortunately for last 6-8 months, and it's only started moving up now. I think, when delivery got listed, then there were a lot of promise. But the performance hasn't been good, but now things have started improving at delivery. Look, logistics is a 1,000-year-old business, and it's critical for business and commerce. Now, what delivery is trying to do is trying to digitize and do this in a much more organized manner. Obviously, there is a value to it, and if they can do it effectively in an environment where there is quick commerce and e-commerce is the predominant form of commerce, and they are becoming more and more powerful. I think for delivery, the sky is the limit. And getting into international logistics was a logical next step for delivery, and that's what they're doing. They did some synergistic acquisitions also in the recent past. There were some question marks for acquisition, but I think gaining size in this industry is important, and they are on the right track.
Okay, Sudeep, great to have you on the show today. Thanks for your time. Shivangi, lovely speaking with you as always. Let's begin winding up for the day. And Kunal, of course, we'll see you again tomorrow morning. Let me hand it over to Ashesha for the closing trades.
It turned out to be a choppy session in Dalal Street. We did try to recover from opening lows, but we gave up much of that recovery. Nifty is ending 120 points lower for the day, near that 25,840 mark. In fact, at one point in time, we slipped below that 25,800 mark, but we are trying to manage and close near that 25,850. Nifty Bank, although as compared to Nifty, was outperforming in trade, but despite that, that one is also ending in the red, 59,220 thereabouts. In terms of individual sectors, Nifty IT was impacted in trade today. In fact, that was the biggest sectoral loser. Nifty IT index ending 1.5% lower. The likes of Coforge, that one in fact was down nearly 3 to 4% in trade today. The biggest loser on the Nifty IT index, 4.5% gone on that counter. Persistent Systems, Wipro, Emphasis were also some of the other losers from the Nifty IT pack. So this sector clearly was weighing heavy on the market. 0.6% lower for Persistent. Infosys was also down more than 0.5%. In terms of other individual stocks, tire counters, remember, were buzzing in trade. Something like an Apollo Tires was up 1.5%. That should come up for you on your screens. In an otherwise tepid market, that one is ending the day with an uptick of 1%. Oberoi Realty, BHEL and ICICI Prudential were some of the other gainers in an otherwise weak market setup. Oberoi Realty ending 1% higher in trade, ICICI Prudential up 1.5%. In terms of other newsmakers, we had PhysicsWallah that reported very strong set of numbers for the quarter gone by. That should come up for you on your screens. That one also was trading with some amount of gains. PhysicsWallah is the stock that we are talking about, although it gave up all of those gains, 2.5% lower on that counter. Fujiyama Power Systems, again, very strong set of numbers. EBITDA margins expanded, revenues rose, and we also had EBITDA and profit that doubled on a year-on-year basis. Fujiyama up more than 1%. All of these rice stocks were in focus today on the back of US President Donald Trump's commentary, which said that they are looking to increase tariffs on import of rice from India. So LT Foods down 1%. We had KRBL, this stock of course recovered sharply from the lowest point of the day, ending 3% higher in trade. We also had Interglobe Aviation, which continued to remain in focus for the third consecutive day on the back of disruption. But now, of course, the management has clarified that all these operations have now stabilized. So yes, all of these individual stocks were in focus today. On the index level, Nifty ending near that 25,850 mark. But let's see how it goes tomorrow. Harsh, back to you in the studio.
Well, thank you so much for that, Ashesha. That's a roundup of the market today. Kunal, what do you make of today's move? Of course, from the lows of the day, we've made a decent uptick. So, I mean, would you look at the glass half full, half empty?
See, if you start off the day at 10 o'clock or 10:30, then yes, it's a very good day. Because then you see a 250-point recovery for the Nifty and almost like a 400-point recovery for the Bank Nifty. So it depends on where you started off. But I think, yeah, to end the day, so the hallmark for the day is not the intraday recovery for the Nifty. I think it's with the market breadth. We started off with almost 1:7 in the way advance declines, and to close in the favor of advances by almost 2:1. I think that's the hallmark of the day, and that tells you that maybe the most part of the capitulative selling from the mid cap and the small caps, I think that could now be behind. Assuming that if the news flow over the next couple of days, that is Fed, if that doesn't to be on the negative side, then we may actually see much more better market breadth opening up, because most of the selling the last 3-4 days could be behind us. That panic selling is over, the weaker hands are out, and there could be a sign that maybe the stability would come back into the mid caps and small caps.
And is the hint, Kunal, in the names or the quality of names which have moved up within mid caps, like we were just discussing? RVNL, Delivery, PG Electroplast, Keynes, the most beaten down of the lot has moved up today.
Yeah, so that's exactly what happens, Aisha. In a zone where the markets go into a capitulative selling, there is a class of stocks which goes into a, if I can use that word, thrashing, which they get into. And then suddenly, all of a sudden, that the price correction stalls for these stocks and they come back into resurrective mode. Volume starts to increase up higher. The stability is far more better. Traders anticipate that these stocks will go into a correction, but the correction doesn't happen for these names. My sense is that if, as I said, that the news flow is not very negative, the index sustains over the next maybe a couple of days or the next 1 or 2 weeks, then you might see the texture of the market, and especially these kind of stocks, improving significantly.
Okay, and viewers, with that, we're out of time for today. This is closing trades, of course. Kunal, thank you so much for coming in and giving us all of those views. And it's a goodbye from Aisha, myself, and everyone who puts this show together. Thanks so much for watching.